Welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. Welcome back. We start off with the United States, where the Bureau of Labor Statistics has reported that the Producer Price Index rose 0.2% in October, matching the consensus estimate among economists. On an annual basis, the index climbed 2.4% in October. The increase was largely driven by a 0.3% rise in services, while the price of goods edged up 0.1%. Excluding food, energy and trade services, the Producer Price Index advanced 0.3% in October and 3.5% year-over-year. The number of Americans filling new unemployment claims fell last week, suggesting that the labor market remains resilient despite the unexpected slowdown in job growth in October. According to the U.S. Labor Department, initial claims for state unemployment benefits decreased by 4,000 to a seasonally adjusted 217,000 for the week ending November 9th. Claims spiked in early October due to disruptions from hurricanes Helene and Milton, as well as the workers' strike in Boeing, but overall layoffs remain historically low. Moving to Europe, Eurozone industrial production fell 2% in September compared to the previous month. This decline follows the revised 1.5% growth in August, which had initially been reported at 1.8%. According to Eurostat data for the bloc's largest economies, Germany experienced the most significant contraction, raising concerns that the long-anticipated recovery may be further delayed. According to a flash estimate from Eurostat, the third quarter of 2024 saw seasonally adjusted GDP increase by 0.4% in the euro area and 0.3% in the European Union compared to the previous quarter. This followed a more modest growth of 0.2% in the euro area and 0.3% in the EU in the second quarter. Year on year, the euro area saw a 0.9% increase in GDP, while the EU economy grew by 1% in Q3. This marks an improvement from the previous quarter, when annual growth stood at 0.6% in the euro area and 0.8% in the EU. Moreover, Eurostat reported that in the third quarter of 2024, employment rose by 0.2% in the euro area and by 0.1% in the EU compared with the previous quarter. This follows a 0.1% increase in both regions during the second quarter of 2024. On a year-on-year basis, employment grew by 1% in the euro area and by 0.8% in the EU in Q3 2024, slightly up from the 0.9% growth in both regions in the second quarter of 2024. Australia's employment growth slowed in October following a period of strong gains. Data released by the Australian Bureau of Statistics on Thursday showed a net increase of 15,900 jobs in October, down from a revised rise of 61,300 in September. This was the smallest increase in 7 months and below market expectations of a rise of 25,000. However, annual job growth remained robust at 2.7%, with full-time positions continuing to drive the gains. India's merchandise trade deficit in October widened to $27.14 billion, surpassing expectations of $22 billion. This increase was driven by a rise in imports, which grew 3.88% to $66.34 billion, while exports rose 17.26% year-on-year to $39.2 billion. In comparison, India's exports in September stood at $34.58 billion, while imports totaled $55.36 billion. Despite the deficit, India's total exports are projected to exceed $800 billion in the fiscal year ending March 2025, bolstered by a government strategy targeting selective products and markets.
It gives me great pleasure to declare open the 29th session of the Conference of the Parties to the United Nations Framework Convention on Climate Change.
COP29 must tear down the walls of climate finance.
At the fourth day of COP29 in Baku, experts warned that developing countries need at least $1 trillion annually by 2030 to transition to greener energy and adapt to the impacts of climate change. This funding is central to the climate talks, with success depending on reaching an agreement on how much rich nations, development banks and the private sector must contribute. The $100 billion annual goal, which expires in 2025, was met 2 years later, 2022, largely in loans, which many recipient countries argue should be grants. A report by the independent high-level expert group on climate finance calls for $1.3 trillion annually by 2035 or more if progress stalls.
So what kind of numbers for the investment? Well, that number for emerging markets and developing economies outside China is 2.4 trillion a year in 2030. Of course, the whole path matters, but in order not to get sort of lost in too many numbers, we focus on 2030 and we point and highlight the number 2.4 trillion as the overall investment needs.
In the MENA region, the Egyptian government signed 2 memorandums of understanding with Al-Qaza Energy and the Volatalia Arabia Alliance to produce electricity from renewable energy sources under a build, own, operate model. The projects will have a combined capacity of 5.2 gigawatts, with 3.1 gigawatts from wind energy and 2.1 gigawatts from solar energy. Minister of Electricity and Renewable Energy, Mohammed Ismail, emphasized the vital role of renewable energy in reducing carbon emissions, diversifying energy sources, and Egypt's strategic goal of increasing the share of renewable in its energy mix. Egypt's Minister of Petroleum and Mineral Resources, Karim Badawi, has reaffirmed the government's commitment to developing the country's mining sector. Minister Badawi has emphasized Egypt's goal to transform its mining sector, noting its current contribution of approximately 1% to the national GDP. He outlined the government's ambitious plans to increase this figure between 5 and 6% in the medium term. This growth, he explained, would be driven by efforts to create an attractive investment environment and capitalize on substantial opportunities within the mining industry. The World Bank has reported significant economic losses due to the ongoing war in Lebanon, estimating the total damage at over $5 billion. It also added that the conflict has caused a 6.6% reduction in real gross domestic product growth in Lebanon this year. The conflict has also had a severe impact on the country's housing sector, with nearly 100,000 residential units damaged or destroyed. According to the World Bank's assessment, the cumulative material damages and economic losses from the war are now approaching $8.5 billion, a staggering toll on Lebanon's economy and infrastructure. Saudi Arabia's annual inflation rate rose in October to 1.9%, up from 1.7% in September, pushed by an increase in housing rents. The General Authority for Statistics elaborated that rents for housing increased by 11.6% in October, with apartment rents up 11.3%, pushing up prices for the combined housing, water, electricity, gas and other fuels category by 9.6%. The category carries a significant weight in the overall basket measuring inflation. Rental price hikes, especially in bigger cities like Riyadh, have been the key factor behind inflation in Saudi Arabia for much of this year. The global cryptocurrency market has surpassed $3 trillion in value following Donald Trump's election, sparking optimism for more favorable U.S. regulations that could fuel a new surge in digital assets. According to analytics firm CoinGecko, the total market value of cryptocurrencies hit nearly $3.2 trillion earlier today, surpassing the peak levels seen in 2021 when pandemic-related stimulus boosted speculative investments. This marks a significant rebound from just a few months ago when crypto prices and trading volumes were stagnant and the outlook appeared bleak. Bitcoin remains the dominant player in the market, reaching a record high of $93,480 as the overall market value hit its new milestone.
Following Donald Trump's recent election victory, the cryptocurrency market has soared beyond the $3 trillion mark, fueled by speculation of potential pro-crypto policies under the new administration. Analytics firm CoinGecko reported that early trading in Asia saw the cumulative market value of cryptocurrencies reach nearly $3.2 trillion, with Bitcoin hitting a record high of over $9,000. Analysts attribute the surge to Trump's shift in stance towards digital currencies, as he was actively supporting the industry during his campaign. His advocacy for making the US a crypto capital and his own venture into decentralized finance have led many to expect a more favorable regulatory landscape for crypto. Major coins like Dogecoin also saw significant gains, with a 152% rise since Trump's win. Crypto advocates are hopeful that Trump's administration will ease restrictions imposed by the previous administration and foster innovation in blockchain technologies. As markets anticipate regulatory reforms, this boost to digital assets underscores the industry's potential for growth in an environment perceived as supportive of decentralized finance. However, experts caution that volatility and uncertainty remain key factors in crypto's evolving future.
Joining us from Dubai to discuss these latest developments is Mr. Rudy Shushani, economic expert. Welcome. Now, why is the cryptocurrency market seeing this kind of surge following the results of the US elections?
Well, it didn't start with the US election. It started with in the beginning of the year with BlackRock introducing ETFs. But then it took a stable note, but reaching all-time high also. But with the recent elections, especially with Trump winning more specifically, he had pushed and he depended a lot on the crypto enthusiasts and promised them that if he gets elected, we will be changing Gary Gensler. We will be adopting new regulations towards better enabling our environment. We will not be finding people. We will be adopting more crypto friendly. And of course, there's one hidden factor here, which is Elon Musk. We must not forget Elon Musk in this equation. So all of this added to the hype.
Why?
And why? Because it's a hype, because it's a market of speculations, all right? A promise of more economical opportunities, more ease of regulations, more innovations, more money pumping in the system. So all of this helps the investors in terms and give optimism to the market that we are going for a crypto-friendly global economy. So with that crypto-friendly global economy, of course, it's ruled by the US, even though the US today is kind of lacking, but that optimism brings more regulations, more normal companies, more institutions pumping money. And this is what we saw with the rise to 93, $480,000.
Okay, you've mentioned we're moving or we're shifting towards a global crypto-friendly economy. What kind of implications can that have on the economy as a whole, as we understand it? And if you can expand on that and try to explain to us the relationship between the cryptocurrency market and the economy as a general concept.
Yeah, today we all know the traditional trading, traditional financing, and all of those normal instruments. But with the rise of crypto recently, within the last 14 years, and especially within the last 4 or 5 years, where we saw a lot of gains and a lot of adoption, we have around 600 million users today on this using cryptocurrencies. So if we reach the 1 billion mark or the 2 billion mark, that's around 20 to 25% of the global, economies. That will change the way money is actually moving because it's already making it kind of better way, less fees, faster. And then with global trade and how the global trade is moving, we need something new. And that's why banks and central banks are not happy about this. And they're trying to launch their own central bank digital currencies to fight kind of this market share that is going away to a decentralized, uncontrolled network where people are moving their assets and moving their money towards this global economy. Now we have also, not to forget, BRICS and so on, but maybe BRICS will also be depending on some sort of cryptocurrencies. We don't know yet. They have released multiple ideas, but we don't have the final idea.
So what can we see in the short term when we're talking about global markets and when we're talking about international trade? What kind of shifts can we expect?
It's a major shift, all right? Why it is a major shift? Because now institutions have to start adapting also their own day-to-day operations into blockchain. And this is not happening yet, all right? So now we're seeing more of the global whales of crypto, such as BlackRock, JP Morgan, and so on, and even, so many other things under it. But it's not really happening across all institutions. So if that is the case with Trump, and then he will be announcing with Elon and so on, new regulations that will dominate and then will enable this as part of the global innovation and financial innovation, then we're going to be seeing more and more day-to-day, salaries, day-to-day transfers, day-to-day money remittances, and all of this today is happening somewhere. Part of it is crypto, part of it is different mechanism or different financial instruments. But if the future is going towards this, we're going to be seeing more and more pumping in a global trade, because today you can track money, track the blockchain, track also not just about the financial aspect, but also the blockchain aspect that secures the trade and then elevate from the fraud that is globally happening. Just to tell you that the global trade is $7 trillion worth. So imagine how much possibilities there are for blockchain and crypto altogether solve this global challenge.
Well, thank you very much for your insights. That was Mr. Rudi Shushani, the economic expert. Now, global shares had a mixed performance, with European markets mainly recording gains amid the release of key Eurozone economic data. In US early trading, S&P 500 futures went up 0.1% and the Dow Jones Industrial Average rose 0.2%. In Europe, Germany's DAX surged 1.2%, the CAC 40 in Paris advanced 0.8%, and Britain's FTSE 100 edged 0.1% higher. In Asia, Japan's Nikkei 225 index fell 0.4% and South Korea's Kospi lost 0.1%. Hang Seng in Hong Kong traded 2% lower and the Shanghai Composite Index lost 1.7%. The International Energy Agency expects the world's oil supply to exceed demand in 2025, even if OPEC Plus cuts remain in place, noting that rising production outside the producer group is met by sluggish global demand growth. It added in its monthly report that the current balances suggest global supply exceeds demand by more than 1 million barrels per day next year. The Paris-based agency left its 2025 oil demand growth forecast little change on the month, expecting oil demand to rise by 990,000 BPD next year. Meanwhile, it expects non-OPEC Plus supply growth to rise by 1.5 million barrels per day next year, driven by higher output from the US, Canada, Guyana and Argentina. Oil prices were slightly higher amid worries about rising supply and slow demand growth. Brent crude futures edged 17 cents to $72.45 a barrel. US West Texas Intermediate crude futures were up 40% to $68.57 a barrel. Gold prices extended losses nearing a 2-month low as investors awaited U.S. economic data later in the day for further clues on the Federal Reserve's monetary path. Spot gold was down 1.1% to $2,546.70. U.S. gold futures were down 1.4% to $2,551.60. And that's it for now. Here's a roundup of today's key headlines. U.S. Producer Price Index rises at 0.2% in October. The World Bank reports that Lebanon's war has caused material and economic losses nearing $8.5 billion. And the International Energy Agency expects the world's oil supply to exceed demand in 2025 by over 1 million barrels per day. Stay connected for more news and updates on Qnews. Thank you for watching.